Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is August 5th, 2013, and today I will cover a couple of key pairs going into the week. Let's just start out with a couple of futures, and we'll jump to the gold futures. And with gold, did not touch on it last week, but we covered earlier the week before, and we saw that we had that waves 1 through 5 completed to give us that wave 1 on that larger cycle, and now we're just waiting on that wave 2 to be completed to look to take advantage of this pair some more. For those that entered the commodity long in our initial analysis, when we were in wave 1, we saw the spike. We saw that spike in the volume. As we saw that this pair was a new wave upwards was in play, and we entered long on what was a 61.8% correction at the time. So you guys caught that entire move up, and then now would be a good area to get out long, and we will then look to re-enter. Or you could just hold on and keep holding the pair, just keep building into the position. But we do anticipate that this commodity will push lower from this point. So for those that are not long or those that are looking to exit, you can look to take advantage of that down move, as we're expecting prices to push back towards 1320 and potentially test this descending trend line and then push down towards that 50 and 60% fib level. So I'm expecting a move towards that 1240 area. So definitely anticipating a move downward. So look for this pair to push lower at this time, and then at that point we will look to buy into the position again and look for it to go higher. Pair we touched on last week, dollar index. And with the dollar index, last week we anticipated a move from this area. Market opened around here at that, which is what is represented by the 0.236 fib line of 81.59. So that gave us a 76.4% correction, and we were anticipating a move higher. Prices also found support at this ascending trend line. So we did see prices start to trend higher, but then it just swiftly went down and retested that 76.4% Fibonacci correction. Retested that level, and then now we're seeing it push higher from that point again. It also broke through the ascending trend line in what appears to be a head fake now, but it did find support at the trend line again. So definitely expecting this pair to push higher from this region. So now this week we could see a move towards 83.5, but the move could be a bit stalled and it could take some time to get there. But looking for this pair to push higher. And both signs in these futures indicate that we should see dollar strength this week. Now, another pair I wanted to touch on was the pound kiwi. And with the pound kiwi, this was our biggest winner last week, as we did enter the pair long at 1.904. We did give the signal out in this pair as we were anticipating it to push higher from this level. As we did see, we got the larger A wave coming down, and then we had waves A and B completed, and we were looking for wave C within that larger B wave. So now within the subwaves, we saw that we had the A and B. The B wave was a 76.4% correction of wave A, and then we were looking for this pair to push higher. We'd also found support at this ascending trend line. So we did enter at 1.904 with stops at 1.898. And then from that point, this pair, our targets were set at 1.955, so a 510 pip run-up is what we were anticipating. And at the end of the week, prices flirted with that level. It didn't quite hit it, so it was at 1.954. But then in the open of the market, prices spiked 300 pips higher from that current price point, so we did get to take advantage of that spike up in the prices, and we did see this pair made us 750 pips. So this was definitely our biggest winner. in the week, and as we look at things, we see that prices could push higher, could push towards 2.0, as that would be a 161.8% move of that wave. So now as we take a closer look at the subwaves in wave C, at the impulses, now we currently see that wave 1 was followed by a 61.8% correction for wave 2. Wave 3 extended 261.8%, just a little shy of that. So we're expecting wave 4 to correct 38.2% before it pushes higher. So hopefully we see some sideways action, but we should see prices push down towards it. Prices actually already hit that 38.2% level, so if we do not see the current price action push below that point, then we are expecting prices to push higher and then push towards that 2.0 level. But I would not rule out a move towards that 50% Fibonacci retracement, which would be a little below 1.95. So you could definitely look to enter along there for those that took advantage and our limits were triggered upon the spike, the market's opening yesterday, or for those that just missed out on the move entirely, you could definitely look to take advantage of it, as we are anticipating a move towards that 50% level. But I'm not ruling out that prices will take off from this area, as we did get a 61.8% correction for wave 2. Then another pair I want to look at is the pound. And with the pound dollar, prices are currently at a good area to get short. Look to get short. Definitely expecting this pair to push lower. Last week, or the weeks before, we did enter the pair short at 154, and we looked to take advantage of it as it ran down about 300 pips. And then now we see that it corrected slightly beyond a 76.4%. Made a slight past that retracement level. So we did see prices push higher beyond that, and it is resisting this descending trend line. Bounced off it a couple of times. You see a little head fake, and then it came back within it. So prices are currently at a good area to get short. You could look for 53.5, which would be a suitable area to get short this pair, and look for this pair to push down and break 150. I'm anticipating a break of 150, about 149. Initial targets on that, so look for this pair to push lower, as we are expecting dollar strength going into the week. And let's just look at one more cross, which is the dollar yen. And with the dollar yen, we see that we had waves 1 down, the larger cycle. We had wave 1 and 2. We took advantage of it a couple weeks back when we entered at 100.4. We ran this pair down, and it was just a bit shy of our 97.5 area. Our target was just a bit shy of that. We did see prices pull all the way back up to that descending trend line again, which gave us wave 2. So we had waves 1, 2, subwaves of that larger cycle. And then now we're working on that third wave in this cycle. So definitely looking for this pair to push lower, and entry points on this pair are not determined as yet, but we're definitely looking for yen crosses to push lower from this level. So I'll probably do a chart on this Tuesday, Wednesday, as entry points become more apparent to us, and then we'll definitely look to take advantage of this pair going down. So thanks for watching today's video. Any questions or comments, definitely feel free to jump in the chat room, and gladly assist you with anything that may come up. So have a safe week trading throughout the rest of this week, and good luck.